Well, so topic of the day is Insuretech powered innovations in insurance. Insuretech powered innovations in insurance. Say, with a modest insurance penetration, insurers in India have a vulnerable opportunity to achieve the vision of insuring all by 2047 by leveraging AI and digital tools. So October 2024 has to be different across many levels. One being Elon Musk's latest gig, the latest colossal super heavy booster, which was successfully caught by the launch tower for the first time in the history. That is the power of technology and innovation. It can reach heights no one could have imagined. And the BFSI and fintech space too, this is a period of rapid and significant changes at the global and local levels. Companies that fails to keep up with the pace of change are doomed to be left behind in the race. However, in the recent past, it is proven that technology's progress coupled with innovation have captured the fintech and insurtech sector from the fringes to the forefront of financial services. And the growth has been buoyed by the robust growth of the banking sector, rapid digitization, changing customer preferences, insurance sector, focus on financial inclusion and increasing support of investors and regulators. During this decade, fintechs have profoundly reshaped certain areas of financial services with their innovative, differentiated and customer-centric value propositions, collaborative business models and cross-skilled and agile teams. This fintech sector saw a nearly 60% slump in funding for the first 6 months of 2024 and is expected to grow year on. India is amongst the fastest growing fintech markets in the world. Indian fintech industry's market size is $584 billion in 2024 and is estimated at $1.5 trillion by 2025. So it's high time now that insurtech firms not only adopt tech but couple tech with innovation and forge strategic partnerships, educate customers and masses across length and breadth of India. So the role of innovation is now even important, and innovative solutions will ultimately establish propositions and deeper with customers. Anticipating and adapting to emerging market demands with agility is now the most efficient way to remain relevant and a step ahead of competition. Our new opportunities also bring fresh and more complex challenges. So how can the fintech and insurtech sectors transform and match up to customers' expectations? So why innovation is the key to growth innovation? The insurance sector goes much beyond adopting the latest technology. It is about reimagining customers' experiences, business processes and models, finding unique solutions to age-old problems and capitalizing on the emerging trends to reinvest insurance. In fact, the insurtech industry is increasingly seeing innovation as critical to success, with 90% of insurance providers worldwide intending to increase investments in artificial intelligence in 2024. So, leveraging insurance technology is the best way to not just fulfill customers' expectations, but also to predict their needs proactively. Brands that respond quickly to emerging needs gain the first mover advantage. Technological innovations have given insurance companies in India the power of big data. Data analytics has not just transformed risk assessment and identification of new markets, but also provided insights to redefine business models. So on the other hand, AI or ML has revolutionized customers' interactions and underwriting. At the same time, cloud computing has given the power of scalability. The recent PwC report highlighted the fact that the application of AI, including the rapid advancements in generative AI, is a major focus area for fintechs and insurtechs. So over USD 12.1 billion was invested in AI-powered fintech solutions in 2023. AI is being leveraged in various solutions catering to fraud protection, credit scoring, personalized financial advice, etc. Hence, in the long run, and in order to reap the benefits, innovations needs to become part of the DNA of the brand. So, move resources to innovations, initiatives, novel ideas cannot emerge in a vacuum. You need to first identify untapped markets and needs. This will give you insights into how best to address them. So the next step is to test solutions and business models for these markets and needs. However, entering uncharted territory without sufficient resources, including manpower, management focus, and assets, amplifies the risk. Therefore, if you want to innovate, you must support it with adequate financial resources and talent. So, India being home to millions of potential across rural and urban areas, there are people who still are not privy with insurance and tech expertise. So, companies now even more need to take care of business and people without disrupting existing systems or operations. So while simultaneously testing new offerings and business models that might be rebalancing product portfolio for stronger growth and expansion, the need for addressing 3Ps, product, process and pathways, different innovation projects might need distinct approaches. For instance, most insurance companies in India and the rest of the world can predict the potential gain in the total written premiums from improving an existing policy or tweaking a core process. So this insight gives clarity regarding possible risk and how to overcome them. But such innovations is very different from building and launching a unique disruptive product such as a brand new life insurance policy that offers amazing flexibility over living benefits. So the new disruptive products come with their own share of risk, which insurers tend to have lesser clarity on. A key example of this was the rise and rapid decline of mutual aid platforms in China. In 2019, numerous such platforms were launched, providing easy access to the basic health insurance. It represented a radical shift in product design. So Ants Financials like Xianghua Wuo was perhaps the most successful of these platforms, garnering over 100 million users within a year of its launch. But these initiatives started winding down just as quickly as they had arisen due to increasing regulatory oversight and errors in customer selection, with young and healthy users abandoning the platforms. So the result was that the remaining participants had to bear increasing cost with support from Insuretech companies in India. So one can across tools to analyze each product's economics and probability of success. This will determine which products need redesigning and which can be coupled with another product to offer a value add to customers. Innovate approaches to engage customers' innovation is not limited to developing new value propositions for products. It should also focus on marketing and distribution. An emerging new product will only give justified returns when its value is understood by the end user. This is especially important given the evolving customer expectations, where hyper-personalization, immense flexibility, and complete convenience are fast becoming the norms. So to engage new existing customers, you first need a more granular understanding of customers' profile across different markets. This will help you to tailor your messaging for maximum impact. In addition, an omni-channel approach is rapidly becoming indispensable to capturing and holding on to customers' attention. Example, Generation Z and Millennials largely opt for sachet-sized products. For instance, 64% of customers expect brands to connect with them on social media, while 70% feel more connected to businesses whose CEOs are active on social media. So, spur innovation with the right Insuretech partner. The time now is for insurance companies in India to partner with a skilled and experienced Insuretech provider to enhance the quality, breadth, and pace of innovation. Given that customers' expectations and market dynamics are evolving, delivering customer-centric and personalized products is the need of the hour. So insights regarding what constitutes such a product for your target market can be best supported by tech solutions for AI, ML powered data analytics. So technology tools can also accelerate innovation by easing change management within the organizations. So choose your partner carefully to integrate innovations within the DNA of your business. See, with the modest insurance penetration, insurers in India have a valuable opportunity to achieve the vision of ensuring all by 2047 by leveraging AI and digital tools. So in terms of the value of premiums, India in 2022 was ranked as the 10th largest insurance market in the world. In 2023, India had a total insurance penetration of 4%, which was lower than the global average of 6.8%, and life insurance penetration in India stood at 3%, a drop from the previous year's 3.2%. However, total life insurance premium grew by 13% for the year. So the figures indicate that there is an increase in the demand for growth in insurance. However, the proportion of the population covered by life insurance is not keeping pace. This hints towards some significant disparities in insurance coverage. So the need is to expand the reach of insurance to all customer segments irrespective of geography and be able to provide solutions for all segments of the society. This is where AI and technology have the ability to bridge the barriers, enabling insurers to more effectively reach and serve India's underinsured and uninsured populations. Tech solutions make a big difference in the internet penetration rate in India has increased from 13.5% in 2014 to 52.45% in 2024. So the government's Digital India initiative has helped boost the ease of doing business using digital tools. Further, people have started trusting these tools and are using them more frequently in their daily lives. So when it comes to insurance, a 2023 study says that 20 to 25% of Indian customers are increasingly accessing digital tools or channels to look for insurance options.